I'm live at the Nigerian Stock Exchange to speak with a stockbroker regarding the post-election effects on the stock market. Analysts prior to now had initially said that because of the elections that were coming up, that the market was having some bearish sentiment. However, post-elections, we have also seen the market shed up to 2.1% week on week at the all-share index. Here to speak with me on it is Mr. Tajuddin. Contrary to what analysts had envisaged post the presidential elections, we're still seeing bellwether trading in the market. What would you say about this?
The moment the winner of the election was announced, market saw it as okay, continuity of the whole program. And the whole program, as far as market is concerned, has not been robust enough to drive the growth of the market. So market did now say, okay, look, are we going to continue with this trend? We will now wait to see what will happen after after the government assumed office again, for the second time. So what happened was was more of a price correction in relation to what is on ground. Market had moved higher than the level that it should have been at that time. So market just corrected itself, more of a reaction.
So at what point would we see a rebalancing in the market in this case?
Market is still waiting. Market has to wait to see what programs the government will come up with to change what is on ground. What is on ground, if we follow what is on ground, market will maintain the normal trend. You won't see much movement. We'll be doing normal trading. You'll still be seeing that that volatility. But the moment we have very strong economic programs and policies from government, then we'll see a different market entirely. But beyond that, those programs will need to impact on the companies themselves. So once we can see that the programs will have that positive impact on the companies, the market will now take a new trend.
In your opinion, what sectors would you advise that investors put in their money at this time?
At this time, banking sector is still the most profitable. Banking sector is the most profitable. If you don't go banking sector, consumer goods is also still okay. You can go to consumer goods, you can go to banking sector. I won't recommend insurance for now because they still have that sector is still having some issue. But if you can also come down to there are still some if you don't go banking, but I still believe banking is still the most attractive sector for now. But if you don't go banking, you can go consumer goods.
Let's talk about the equities and the treasury bills. We see that more investors are getting more interested with the treasury bills than the equities. Yeah. What's your thoughts on this?
Because they are trading against certainty. When you trade fixed income, you are trading against certainty. You know the income you get. The income is established before you even subscribe to that instrument. Unlike equity, that you are trading against variable income. You are not even sure what it will be. You may get it, you may not get it, you may get nothing. You may get zero. You may even be asked to come back and pay more. But in fixed income like treasury bill, you are trading. You know what income you will get. You already know. The only risk you have is that the interest rate might change. But in the current situation, you are trading against fixed income. The income is known to you, but the other one income is not known.
And there you have it. Let's hope the market rebalances itself in good time and investors start to come back into the market. For Plus TV Africa, Irene Ubani.